What is going on, guys? Welcome back to another video. Hopefully everyone is having a blessed day so far. In today's video, we're going to be going over something really important. A lot of you guys have been recently asking me about which institutional candle do I usually tend to pick, because when you look at the different time frames, there's multiple different institutional candles there. So which institutional candle is the optimal one to be picking? And today, guys, I'm going to show you. So yeah, in today's example, we're going to go over a nice gold sell that we were able to catch last week. It was a 10-to-1 risk to reward trade, which I believe will even drop even more, but so far it's 10-to-1. So yeah, I'm going to show you guys how we were able to catch that really nice trade, and that trade occurred right here. Okay. This trade occurred right here, and we were able to sell it on the absolute dot. I mean, there was literally zero drawdown, and now I'm going to show you how we were able to do that. So obviously, one of the first things that I've been saying it over and over again at this point is the understanding that you have to know where you are in market structure. Okay, so when we take a look at the 4-hour time frame, I understand that we came from a distribution, we were able to expand, okay, we were able to sell off, and now we're in some sort of we're in some sort of consolidation once again, okay, and we're looking to drop from here. And why am I picking this area? Because I'm focusing on this imbalance, and I see that 50% of the imbalance right here, okay, pretty much most of the imbalance right here has been filled in. Okay, so now I'm expecting a drop from here, but obviously I'm looking for some lower time frame distribution. Okay, so when we zoom into price action right here, and we forget about the higher time frame price action that we had to the left, now I'm looking more at this portion of price action. I drop down to the 1-hour time frame, and what I can see is multiple areas that have been mitigated as we push down along. But the moves, okay, the range is still there. It's a large range, okay, and clearly you're able to sell here, you're able to sell here, and I believe that even if this range doesn't break to the downside, we'll still be able to catch all the way down to here, at least to the demand here. So all in all, that trade, okay, would have worked even if the higher time frame structure is not there with you. And it's all about understanding where you are in structure, and like it's all to do with really how experienced and your full understanding of advanced market structure. And this is something that you kind of just get with repetition, experience, and obviously the right guidance. Okay, so with gold right here, I can see that we reacted from this institutional candle right here. Okay, I can see that we're kind of playing kind of ping pong right here. So what's this called? This propeller candle, where price is being mitigated and it pushes price down, and then it comes and mitigates the area again, pushes price down, and it's creating secondary candles and tertiary candles as it's going. Okay, and once again we come back up, okay, we touch the institutional candle and it pushes price down. So this might not be clear right here, but when we take a look at the lower time frame and we start kind of dropping down to the lower time frames, and this is where I try to find the best institutional candles. If I don't like the 1-hour institutional candle, I go through all the lower time frames, okay, and it takes me seconds. I'm going 45-minute, 30-minute, nothing nice here, 15-minute even, okay, nothing nice here, okay, 15-minute kind of looks decent. I'm even looking at the 10-minute time frame. Okay, so I bring up the 10-minute time frame, I bring that up on favorites, and we look at the 10-minute time frame, and I can see that the 10-minute time frame here visually looks the best for us. We can see a nice last up candle for the down move. You can see a small consolidation, so a little CMT right here, small consolidation, take out the high, bearish engulfing candle, bearish momentum coming in right here, and then we can see that this institutional candle has been created. So this is an area where we will be looking to sell from once price taps back into it. So we take this whole area, and this is an area where we will be looking to sell from. Okay, so what does price do? Price comes up, taps into our point of interest right here. Let me make that tighter right here. That was our whole institutional candle. Price comes up, okay, reacts from this, first of all, this supply right here. But why did I want it to come up a bit more? Because we had some sort of imbalance, okay, right there. Okay, we had a smaller imbalance. When you go into the higher time frame, you'll be able to see it. Now we drop down to the 10-minute time frame, and what do we see? We see price pushes up into the 10-minute institutional candle, and it reacts. And once we see this reaction right here, just like so, what can you see here? You can see a distribution starting to play out. Okay, so we push up, we tap into the institutional candle, straight away we react. Now, guys, I can break this down, and I'm telling you, the opportunities that you're able to catch here, it was just unbelievable. There was like 1 minute entries, etc, etc, but we're just going to stick to one single time frame. It's just going to be the 10 minute. Anyways, price reacts from here, and we make this push down. Once we see this push down and we break structure, okay, we see the break structure right here. This is when I am looking to sell. Bear in mind, as we're making these moves, okay, and as we're making new lows, we're leaving highs. Above these highs, we're leaving areas of liquidity. So you can understand that there's liquidity being built up above these highs. Okay, so we have a double top right here. And once again, we push back up into this area after we clear this liquidity. Okay, we push back up into this area once more. And you can see we create more liquidity and more liquidity. So basically, this whole area becomes an area of consolidation for us. Okay, and relatively equal highs. So for me now, I understand that we tapped in, okay, into the initial institutional candle. Bear in mind, this institutional candle mitigated this. So we had one institutional candle here. And now we had a second one once again here. So you can see how this level is literally becomes so strong. Okay, because there's multiple point of interest in literally one level right here. As well as that, we have the consolidation right here. This distribution with the liquidity, the equal highs above. You can see why we should be expecting a move from here. We're basically stacking levels. Okay, and you watch this sort of this lesson about importance of stacked levels. Okay, on the stacked levels lesson. Okay, so just scroll through my channel, you'll be able to find it. And notice how we have that consolidation and we're expecting the sell-off, but we don't know when. We broke structure to the downside, and we clearly see price ranges are getting wider and the volume is increasing. So this is basically a good sign for us to be pushing down now. All in all, with the higher time structure, that's what it's telling us. So look at how, once again, adding up the confirmations. And I'm trying to keep this as simple as possible for you guys. And now when we break it down into the lower time frame, and what can I see? Now I start seeing my consolidation right here. Okay, my consolidation, this is C, and I'm not going to go through this because literally this is one of our main kind of things that we look at. Okay, CMT, and this is something that I covered in the course lesson, so if you didn't take a look at that, make sure you take a look at that. CMT is important, and it's something that a lot of people don't even understand or go through. Okay, and it simplifies everything for you. So you have consolidation, manipulation, trend. Look at the timing of the manipulation, 8:15. Does that ring a clock? Does that ring a bell? So I'm not going to go through, but understand the timing right here, how we have the fake London rally. That's all I'm going to say. That's an extra confirmation. So this is why this trade was nearly picture perfect. Okay, so once we see the consolidation manipulation trend, I wait for a break of structure, which is basically my change of character right here. So I get my CHOCH right there, and I can barely type because I'm in a cast. I'm struggling. So we get the change of character, and boom, price pushes down. And now what do I look for? I look for a retracement back up into the institutional candle. And this is the area where I'm going to be looking to sell from. There we go. Okay. So price pushes down, creates highs as we come back up. Okay. So just a lot of liquidity. And as you can see, especially with the start of the year, gold has been very slow. That's kind of clearly visible from the choppiness that we're kind of seeing and the consolidations. But either way, what do? Big push up. We break these. We break this resistance. Okay, that people were most likely selling from as well. So all in all, look at the amount of manipulation occurring in this whole small move. If you look at it from a 1 hour perspective, you don't really see it. But when you really break it down to like the 10-minute time frame, you can really see it. This institutional candle is so clean. The fact it cleared all of the liquidity, then dropped, broke structure and retraced, and you would have gotten in right here. Zero drawdown. If you looked at the 5-minute, okay, you would have seen it as well, but you would have missed it. If you looked at the 15-minute time frame, you wouldn't have seen it. Okay. 30-minute, you wouldn't have seen it. 45, you wouldn't have seen it. Even if you did see it right here, okay, you would have gotten stopped. 1 hour, same thing. You would have seen it right here. You would have gotten stopped. Okay. So time frame, yes, 10-minute. We like not much people look at it, but sometimes scrolling through all of these different time frames gets you the best institutional candles. And this one visually is pleasing. And what do I mean by visually pleasing? We have the nice wick, we have the big enough size of the candle, and a nice bearish engulfing candle to come after that. And what happens then, guys? Boom, price melts down, taps into the demand, of course reacts a tiny bit, but I still believe that we should see more bearishness after this. And yeah, I mean, you guys will be able to see if it does indeed sell off, after this video comes out, or if it doesn't. Okay, so even the fib right here lines up. So I mean, guys, what more confirmations could you have wanted for that trade? Okay, and it's all simply understanding higher time frame structure, finding the area of liquidity, understanding where you are in the phases of Wyckoff, so in the distribution phase right here. Okay, and boom, understanding where you are in the other points of interest as well. Now, this, you're not always going to get this for this specific setup. That was a really high probability. You're not always going to be able to kind of come back to the same area and sell off multiple times. But that's just kind of the characteristic we're seeing on gold lately. It's just creating large swings, but the pullbacks are nearly as large. So yeah, I still do believe we'll see lower pricing, at least clear the slow here. But for now, that's what we were able to catch on gold sell. And the RR, as you can see right here, was a 10-to-1, as I told you guys earlier. Above the close, are we targeting this demand, okay, or this low? This is where I would be targeting realistically, and I would shave off a small bit at this demand, because you don't know if price will react from this demand or not, okay, especially since it's consolidating. Okay, so here or here would have been the two potential take profits. Okay, so that's pretty much it for this video. Now we do as well, guys, send signals for you to be able to kind of learn, basically earn as you learn. Okay, so we do send signals for these type of trades through our FU Academy app. So if you do want to get signed up, it's only €30 a month. This is once again just a service that if you guys are interested in, especially if you don't have time to trade or stuff like that, we're sending the setups that I'm marking out here. These are the type of setups that I'm sending through to the app, along with order flow setups that the branch is sending to the app as well. So if you guys want to get our trade ideas and signals, etc., whatever you want to call them, then yeah, make sure to check out that package there. With that being said, guys, that is pretty much it for this video. Hopefully you guys gained a lot of value, and I'll catch you guys on the next video. Have a good one.